With all the stocks to choose from in the stock market, which one is the best one to buy right now? The answer, for me, is surprisingly familiar. I'm going to tell you in this video what that stock is. In fact, it's been the same stock for me since the start of the year. I recommended this stock to start the year, and I said this was the best stock to buy. Right now, I'm recommending it again. I still think it's the best stock to buy right now. So let's see what this stock is, why I like it so much, how it's done so far, and why I think it still makes a good investment.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so my top stock to buy right now is Alphabet, Google, and I actually prefer the GOOGL shares. Already this year, year to date, as of January 26, Google has delivered between 8.73 and 8.83%, depending on which one you bought. If you bought GOOGL, it's up 8.73%. Now compare that with the S&P 500, which is up 2.67% year to date. So with my top stock to buy, if you had picked this, you would be outperforming the S&P 500 by nearly 3x, by roughly 3x. Now that's an excellent return. I don't expect that type of outperformance to continue for the rest of the year. I think there will be a closure of that gap between this outperformance. That being said, this is an excellent performance. I'm thrilled so far this year with the performance of Alphabet stock. And, honestly, I'm thrilled with the performance of most of my recommendations so far year to date. If you look at my top 10 growth stocks to buy so far in 2024, that's outperforming the index significantly. If you look at my top 24 stocks to buy for 2024, these are overall stocks, not just growth or dividend stocks, just my top 24 stocks to buy. That's outperforming the S&P 500. If you look at my top 10 dividend stocks to buy, that's outperforming the dividend ETF. And then if you look at my top stock to buy overall, that's outperforming as well. Even if you look at my top dividend stock to buy, it's significantly outperforming the dividend ETF. So overall, I've had a phenomenal year so far, and I don't expect this kind of outperformance to continue, where nearly all of my recommendations have outperformed their respective comparable ETF or broad market index. That's unrealistic to expect that kind of outperformance longer term, because if I was to deliver that kind of outperformance consistently for over a year or over 3 years, I probably would be managing billions of dollars with that kind of performance and not be making YouTube videos that sometimes generate $1.76 on the video. So don't expect this kind of outperformance to continue, although it has been refreshing to see excellent performance and to see these stocks that I've felt were undervalued and deserved an increase in valuation, because I've just felt like they're undervalued compared to what is available. These are good companies like Alphabet, which I'm going to share with you here. It's just a really good company. Strong profits, excellent revenue growth, dominant market share, trading at what I feel is a bargain valuation. So if you look at Alphabet's revenue in the last decade, it's more than tripled from less than 80 billion up to $297 billion. $297 billion. That's a massive sum. And this isn't a company that's generating revenue growth at the expense of profitability. No, these are revenues that are coming with strong profit margins. Let me share with you the profit margin. 26.51% operating profit margin in the trailing 12 months, and consistently above 20% for the last decade, although it's been even higher. But for the most part, it's been above 20, 24, near 30 at one point. And if you think about the business model, it's understandable that it generates such strong profitability. If you think about YouTube, which most of you are probably watching this video on YouTube, I'm making this content and Alphabet won't pay me unless the video makes money. If advertisers don't pay for this video, Alphabet won't pay me any money. YouTube won't pay me any money. So there are, I don't know how many creators like myself that are uploading content every day that just gives Alphabet a free opportunity to generate revenue. They share only a fraction of that revenue with me, and they keep the rest of it for themselves. And they've got over 2 billion monthly active users on YouTube every day, every month, I should say, logging in, spending hours on YouTube every month. It's a lucrative business model. And then you think of Google search, dominant market share, the most dominant market share worldwide of any search engine. Of course, marketers would want their products listed next to search results that are relevant, right? What if you have a mom that's going online searching for bath toys and you happen to have a company that sells rubber ducks? Wouldn't you want your product search right there to show up as a sponsored result for mothers that are looking to buy bath toys? Of course you would. And you would be willing to pay Google for the right to have your company up there. And so it's just a very, very lucrative business, and it's going to be difficult for anyone to take that market share, even though they will try, and even though they may nibble at the margins. Longer term, I think Alphabet holds on to the market shares it's gained in its various segments, and it's also gaining market share in the cloud business, which recently turned profitable for Alphabet. Started out as a losing endeavor, and now it's profitable. Another lucrative segment for Alphabet. You look at the cash flow from operations to sales, over 30% cash flow from operations to sales in the last decade. And I didn't mention in the previous slide, but last year, Alphabet fired or laid off thousands of employees, and this year it's reported that it laid off hundreds of employees. So those lower costs are now going to lead to better profitability for the company going forward. I felt like it had been a little bit bloated in terms of employee count for the last several years, but the business model was just so lucrative that it wasn't showing up. Like, you could still see excellent profitability, even though it was a little bit bloated, and it could do even better. You didn't really notice because the profit margins were so strong. But now that it did trim some of those excesses, its profitability and its cash flow should be even better going forward. And then did I mention one of the strongest balance sheets in the world with $119 billion in cash, nearly $120 billion in cash at a time when cash earns 5% in the bank? So just off of this cash hoard, Alphabet will generate $6 billion in interest income. That's all cash. That's all profit. Interest income goes straight to the bottom line just because it has so much cash. Now, I'd prefer they invest that money in something that's going to generate a greater than 5% rate of return, but they have this money. They can use it for buybacks. They can maybe initiate a dividend in the near term, maybe increase the buyback, or just let it sit there and earn $6 billion in the year for putting it in a super safe government savings bonds or money market account. And finally, you're getting this business at a forward price to earnings of 19.65. I think that's still a bargain price for a company with this type of revenue growth, with this type of profit margin, with this type of cash flow, with this type of competitive advantage and market share in its respective industries. Overall, I really liked Alphabet's business coming into the year. And even though it's up, over 8%, nearly 9% on the year, I still like the stock. I still recommend Alphabet as my top stock to buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.